The reason we wanted to bring you on today, besides your glowing personality, is we want our folks, the folks that are tuned into what we do, the folks in our network, the folks that are new to our network, to get to know you. It's one thing, and we've had you on and done some trainings on the estate planning side and some different pieces. We can certainly get into that, but more than anything, we want them to get to know you. Your address, your credit card numbers. No. Just the person behind, for lack of a better term, the product, if that makes sense, or the service.
Yeah.
Because you really are an incredibly caring, compassionate, empathetic person. I think when most folks think, especially, legal, it tends to come.
Those words are not words that come to mind. Caring, compassionate, empathetic.
Yeah, there's this sense of like disassociation, depersonalization.
Clinical.
Yeah.
Well, that's the difference with us, especially where the trust business is going. A lot of people are doing these online platforms and all these other things. So we take that away and we bring the personal touch to it and walk them through everything and really service oriented,
Right.
So that's the difference of us. And I have a whole team and we really do a good job. I'm pretty passionate about it.
So what got you into legal, into law, into estate planning? Because I can promise you, I don't know your whole life, but I can guarantee there was not a point in your childhood where you were like, hey, I want to pour over really complicated paperwork all day, every day for like 30 years. That was not your dream, right? So what kind of was the buildup and kind of moved you into this sector?
I mean, it was pretty much in the late 90s. I affiliated with a company that did trusts and just really grew through that company and then really became partners with the owner and in a few years, probably like 4 or 5 years later. And then there was issues with that partner. I took over the business. So the company's been through a lot of changes in the last 25 years. There was a period where I had like 30 staff members and we were doing this huge marketing, program. And then it changed to, there was a tough time where I was doing like 4 attorneys, each giving 8 presentations a week, if you can believe it. So 32 a week back when we did newspaper advertising. And, that was just a huge success. The company grew like 5,000 people in a few years, but people stopped showing up at the workshops. So I had to get rid of a lot of my staff down. So, so it's gone through cycles of different marketing and different people on board working, different partners. And so for several years, one of my partners was my father, who's an attorney. So, I've had just several people come on board as partners with me, but, it's just been through different cycles. And so 5-6 years ago, the business strategy, changed where the phone rings just off referrals from clients. But I got involved with all these agencies and financial groups and got to know the agencies and the guys in the group. And that became the new marketing source to really expand the business and also money talks, so I'm going to get the attention of that insurance agent a little bit more if we give them a referral fee, right? They're going to get paid. They're going to want to bring business to us more than go to somebody else. So that just really took off. And then the word of mouth grew because, we're pretty serious about doing a good job. So, the reputation, speaks for itself. So it's just been through a whole different variety of cycles over a quarter of a century of, a little bit, some roller coasters, not always perfect and, a few hard years here and there. And, but, that's kind of our story. So we, obviously I've been doing this 25 years. I've been through the highs and lows, have different people on board with me and all that. But, our reputation speaks for itself and the phone rings off of doing a good job. And God knows, I know if our reputation, we don't do a good job, that's going to mess up the entire system, because that's what we're doing is growing the word of mouth.
It's crazy because that's a phenomenal way to grow. I want to touch on one thing you mentioned was that money talks. I think, or it might not have been DMX. One of these famous rappers said that money talks and bullshit runs marathons.
Yeah.
And then he continues on. But But I do think that's one of the things that initially stuck out to me when I first heard about y'all was, wow, this is a law firm. This is a full-blown, full-service estate planning group that's not just asking for me to send my clients over. And of course, y'all are going to take great care of them, because if you screw them, I'm never sending you another piece of business.
Yeah, exactly.
But you're also willing to invest into me as an agent, as an agency, and make sure that my moments are monetized as well, because I'm running a business too. And I think that's pretty cool. When and where and how did you guys decide to start doing that?
You know what? And to be honest, like probably again, I mean, when we started this in the early 2000s, it was gangbuster successful. I mean, I learned some lessons back then too. I thought the good times were in a roll and always roll. You know, like I never thought there'd be another bad day. You know,
Spoken like a true entrepreneur. I can never go down for a down a road.
yeah, and now I have a crown on my head, and you know, it's just going to keep flowing in with no problems. No.
And then all of a sudden you sit on a throne of lies.
Yes. A bad partner, you know, and he was actually laundering some money and just had to lay off a ton of people. That was horrible. But basically, there was a period of time I went through some personal hardships. Like I'm a single mom with 2 kids, and my ex-husband had a stroke and all these other things. So my company was going through a hard time. I was going through a hard time. And so I needed just the trust is for the prices that we charge, you know, because we're gearing towards wanting you to bring business to us, and, you know, being available for the middle class. You know, we're also available for the upper class too, but, you know, so we charge a fair price, but we're not making a ton of money per trust, right? I mean, there are so many people that need to get paid. You know, I've got an attorney, I have to pay a paralegal, I've got some staff member, you know, so, you know, what I net is not a lot. So the business was slow. So I needed a way to supplement my revenue. And so I joined on to an insurance agency group. And so from that point, I met with the agency owner and I said, I would love to be able to promote these trusts to your guys and give seminars and da-da-da. And so from there, you know, some of their agents gave me a try, and then they would call their client, and I'm not giving myself, you know, a pat on the back, but the client would be like, she's amazing, she does a great job. So then they would tell people, you know, so it just took off, and one person would tell the other, and it literally like spread like wildfire. So I had to get in there and prove myself, and it just kind of took off on and on from there.
That's a piece that I've really appreciated in our conversations, because I feel like oftentimes, even when it's not high net worth clients, even when it's just middle class clients, and we're not doing these big, crazy advanced strategies, I find myself not anytime, but often when I'm bringing attorneys, tax preparers, you know, CPAs, I've got to do more education with them than, you know, I'm like, hey, I'm setting up a modified endowment contract. It's tax deferred. It's treated like an annuity while the client's alive, and like life insurance when they die. And this CPA is sitting there with his eyes wide open, like, I've never heard of this. And it's like, how the hell?
Yeah.
And having to do some similar things with some attorneys in the past. And one of the things I've appreciated, number one, I've never felt like, okay, you've got some ties to insurance, you're going to steal a client. Never felt like that.
Never.
I've appreciated actually your connection to this side of the industry, because I don't have to explain things to you. You already know it. And if you don't, you've got somebody on your team who is, you know, very intelligent in that regard. I don't think yet, since we've been connected, I've had to take a moment or take a bunch of moments and educate you about the thing I need you to do for a client. You and your team have already been up to snuff. And I think having that perspective and just the exposure to our side of the industry has helped a ton. Have you had any experiences where that's maybe shown through a little bit more than others? Or I don't know, how has that played into not just your model, but helping agents to actually solve problems for clients?
Because it's really, in most scenarios, a full circle, you know, not for, you know, maybe an older person, but I mean, in a lot of scenarios, you know, if you're doing the trust, you know, and certain things aren't set up properly upon the death of maybe the first spouse, and, you know, or if you both die and the children, you know, aren't going to be properly taken care of, there's going to be an issue in the estate plan. So, basically just the knowledge of that, I can set the agent up, and if that's actually happened, I'm like doing the questionnaire. You don't have any life insurance? Well, let me get you back to discuss this with whomever, set me up with them. And then, a big one is long-term care too. That's a huge estate planning topic.
Oh yeah, I tell my clients it's a risk multiplier.
Yeah.
You can have the best laid plans out there. There, long-term care, it's two things. There's a product and a need.
Yeah.
Long-term care is a need. It's a risk multiplier. That is where Home Depot and Walmart greeters are born.
Right.
Because you and your spouse had these fantastic plans laid out that were all contingent upon things working out in the best case scenario. And we know that that's not how it works most of the time. 50% of the time, it's not the best case scenario, And so when you don't have some kind of plan in place, it's like, cool, well, what do you have? When you have these joint assets that you intended to both live off of, and something happens to your loved ones, like, well, what are you going to do? It's like, I have to tap into this thing because there's resources out there like Medicaid that will help pay for that need, but not until you spend down your assets
Yeah.
to the poverty level.
Yeah.
And then when it does, now you don't have your loved one and you don't have the assets. So back to work.
Yeah. It's like it's a full circle thing. And then when we do the trust, we talk about funding, of course, which is critical. And so, you have to have a little bit of an understanding of how retirement plans work and how inherited IRAs work, and making sure the beneficiaries are set up properly with those institutions, because it's really full circle. Some people make decisions on how trust assets will be distributed based on also how their IRAs are set up. So if something isn't looked at and overlooked, it could get complicated. I hope you know what I'm saying. Like,
Yeah.
I had a client that had $1 million IRA, and if they didn't have the beneficiaries correctly in there, because it's not a trust asset,
Right.
they wanted 100% of that IRA to go to the son and 100% of the house to go to the daughter. Well, okay, all that needs to be thought of and really carefully planned out.
So
And I've got a question for you about liability exposure. So I've heard from different clients. I have clients that are on two different sides of the fence. Most of my clients are reasonable human beings, but every once in a while I run into a couple that they're either on really one side of an argument or the other. And the conversation becomes from a liability exposure standpoint. I have clients that multimillionaires from a balance sheet standpoint that feel that their umbrella policy is enough. That's enough to protect my assets should something happen. On the flip side of that, I just met with a client a couple weeks ago that has a trust and feels that because she put her assets in the name of a trust, she doesn't need more than state minimum coverage on her auto policy and her home policy because, well, those assets aren't in my name. So if something happens, they're protected. So I think the answer is probably in the middle, that those two things do two different things and they really work together to form a complete plan. So what's the risk reward on both sides of those? I have a trust, but I don't adequately have my assets, liability protection for my assets, or I have adequate liability protection for my assets, but I don't have a trust.
Well, I mean, I just had the issue with this morning, actually. So I think Carson, I think I told you about Gary Lane. He's with my company, and he actually was with me since 2000. He does the irrevocable trust. So the irrevocable trusts are a whole different creature other than the revocable trust. So the revocable trust, for the most part, does not protect the client from liability because the tax ID is their social security number.
Yeah, it's pass through.
Yeah. So, a lot of times, like we have a guy in my office too, Jim McHenry, who does LLCs. So he can help clients set up LLCs, Wyoming or Delaware, and that can be coupled with the revocable trust. Like the client this morning just had such a severe, goal, or his whole focus was liability protection and really didn't care about anything other than that. I put him over with Gary, and he's going to do an asset protection irrevocable trust, which, you know, they're much more expensive and complicated. You know, they're the owner of the trust, and then the trustee has to be somebody else managing the trust.
Right. That
You know.
arm's length, right?
Yeah. So for the basic average person, the irrevocable is going to be too sophisticated, but not for all, you know. So most people that have a rental put their rental in an LLC, and then we assign the LLC to the trust along with that umbrella policy. And that's pretty good versus going the irrevocable route. But we can do that too. Like Gary does Medicaid trust too, which are those irrevocable life insurance trusts too. Not life insurance, irrevocable trust.
My response to my client that said that the trust was sufficient, I said, well, do me a favor. Just humor me, because I wouldn't be doing my job if I didn't ask a couple questions. Will you do me a favor? Will you please reach out to your attorney and ask them to write a letter for you stating that if something happens to you personally, that those assets won't be touched, and that he personally guarantees that.
Yeah, I've actually had people lie about it almost.
Yeah.
You know, just to build the value of what the trust can do, but it is not a liability. I mean, you can assign a different tax ID number to the trust after it's in place, but ultimately it's just not, you know,
Not what it's built for. It's a multi-purpose tool, and multi-purpose tools do a lot of good things a lot of the time, but it doesn't do everything as good as a purpose-built tool.
Yeah. And, you know, I'm watching a lot of the TikToks and the social media ads about what they're saying. And some of these people are saying things that just aren't true, you know, or they're catering to, and they're catering to like people with $20 million. And that person in TikTok is like, I never have to own anything. And they really don't even have any assets anyway. You know, it's like, so.
It's the Diddy plan. Yeah, put
Yes.
everything in your mom's name.
Yes.
So kind of a different kind of question, but I would love your take on it. As you're partnering with insurance agents and financial advisors, what are some of the biggest frustrations y'all have on your side about not necessarily the client, but maybe more so the way that agent or advisor has or hasn't handled things appropriately? Well, do you ever have frustrations with, well, they should have done this, or they should have talked to you about that, or, oh, they told you that? No, that's not true, or whatever the case may be. I guess the reason I ask is I would love to, I don't want to focus on the negative, but I think it's important to hold people's feet to the fire. And, you know, we got to talk about how are you messing up, and what can we do to partner with a firm like yours better to better serve the client at the end of the day, right?
Well, I mean, you know, and the whole business model is set around two things: to make it super simple for you, the agent, to get the client over to me. Just, you know, so I don't even have them educate them, just have me educate them. I mean, the one thing they don't do, which I find astounding, I know the big thing is your FIFs, right? Fact finding, you know, when you do it. No one asks, not enough people ask, do you have a trust? You know?
We do.
Yeah.
We teach people to do it, but here's what's crazy. So we teach hundreds and thousands of agents. Do you know how many of them actually follow through? Like maybe 5% will actually do all of it, because we teach them, you should be asking about wills and trusts. They don't have to have an attorney on retainer, but they need a plan. If the crap were to hit the fan, who would I pick up the phone and call? I mean, in so many different ways. And these are all risk exposures, and especially when you're talking, for example, like retirement. If I'm going to take somebody's money, start shoving it away, oftentimes locking it up, indemnifying it, could be in IRAs, Roth IRAs, annuities, and whatever the other cases might be. Might even be some cash value life insurance, right? If I'm going to do that, they no longer have access. What's their plan when the crap hits the fan? Because if the crap hits the fan and they dip into that, not only do they ruin the integrity of the plan, but often they're charged huge fees and expenses for doing so. So it behooves me, you know, if I'm setting up a client for whatever, it behooves me to ensure that they have a backup plan. Like, do you have a savings account? Do you have a will and a trust? Your will was written in 1954. Does it have a pour over provision? Because these days, pretty much all wills do, but back then it wasn't as common always to have pour over provisions, and life changes. Like, how often are you meeting with your attorney to update that will? You know?
And when was the last time you reviewed that?
Yeah.
When it was written? It's like,
Yeah.
ooh,
Yeah. I have an appointment this afternoon with somebody who got their trust with us in 2002, 23 years later. So, and you know what? 100% of people, regardless if they have a home or not, and they're buying life insurance, if something happens to both of them to take care of their kids, they need a trust because that death benefit needs to go into a trust. Otherwise, it's going to go to get, you know,
it's locked up. Kids don't get access to it until they turn 18. And then would you want your 18-year-old? You said you're single mom, 2 kids.
Yeah.
When your kids turn 18, would you want them to get $250,000?
Yeah, they're 17 and 19. So
Because all that would do is enforce bad behaviors. Like,
Yeah.
I know some kids that got a bunch of money when they turned 18 years old, and nothing good happened. Number one, nothing good happened to any of those kids. And number two, within 3 years, none of them had any of it left.
absolutely. I've had a friend or two with that too.
Well, in the alternative, what I hear often from my clients when they're making excuses, so like Peter's clients, they're like, hey, I've got to trust it's enough. I've got clients that I'm like, hey, you ought to go talk to an attorney to see if a trust would be a good fit for you, right? I'm not here to give you legal advice, so I can't tell you need a trust. What I'm going to tell you is, from my experience, most people in your situation are bettered by having one, but you ought to talk to an attorney to see if that's right for you. And the thing that I'll get back when we're talking about leaving that life insurance, right? If something was to happen to you, is, oh, you know, my brother and sister are going to get the kids, and we'll just list them as contingent beneficiaries. It's like, okay, I know you love your brother and sister, but you're going to leave them $1.5 million. I promise they get a new house. Because there's no state that's there that's going to tell them they got to use this money this way or that.
They can do whatever they want.
Right. And it's like, hey, I understand they're going to raise your kids. So now your kids get to be raised in a nicer house. But, you know, Harry Potter lived in a nice house in a cupboard under the stairs.
Yeah.
Right. So it's like, hey, that trust, that's a cheap way. That's a cheap way to you're spending all this money to leave the life insurance. That trust is a very affordable way to control that money from the grave so that it's used the way that you most see fit for your kids to have access to that money.
There's rules on it. And you can put conditional rules on it too, right? Like, hey, if my kid is not living within the core values that I believe in, no money until that changes.
100%. And most people don't trust people that much. Like you said, the brother and sister. I mean, that's, so.
Yeah, it never goes that way. I promise you, if you do that, I promise you, Jim and Jenny are getting a new house, and they might not spend all of it on a new house, but they're going to spend a lot of it on that. Their plan is going to be to deplete that money by the time your kid is 18. It'll be gone. Maybe you had some special instructions like, I want to set up a college fund. So they're going to look at state community colleges and say, well, we only need 10 grand a semester or 10 grand a year for that. And they'll peel a little out. But there's a lot of options. And then to Peter's other point, if you don't have anybody there, so even before they're 18, most folks don't realize this. And I know you do, Dina. You leave your kid, your minor child, a bunch of life insurance money. They don't get it till they're 18. Instead, it gets watched over like a hawk with usually a state appointed executor, which is usually an attorney who is not a financial planner, but may have strong views about different.
They put it in a savings account with Bank of America. It's earning 0.1% a year.
Yeah.
They'll do that, or they've got a buddy over at, so-and-so, whatever financial firm that gives them a little kickback. We've seen that happen quite often. And they have it dropped into some CDs, and maybe they don't get an actual kickback because they'd lose their licenses and be disbarred for that in many cases. But, they get their country club membership paid for and steak dinners and
Man.
Exactly. Why would you want your attorney looking over your legal matters? You want somebody that deals with money, dealing with your money. You want somebody who deals with risk management, dealing with managing your risk.
Yeah.
So,
and you want to go most people don't want to go the expensive route too and have ongoing attorney fees, for years and years after you pass. So mentioning
the expense, that's one of the things that for some clients, we have a really good friend of the family, that has been a sticking point for them, that, to get a plan put in place, it's going to be a few $1,000s to do everything the right way. And it was funny because it was my mom that got them over that hurdle. My parents had just set up their trust in the last 12 months, 18 months. And my mom and this friend were talking, and she was like, well, you and your husband have done a good job creating this life together and generating some wealth. And don't you want that to go to the kids? And her response was like, it's my money. I'm going to spend it, and they can have whatever's left over when I'm done with it. And that's where I popped in. I was like, hey, just food for thought on that. It's like, is there someone, this is a Van Miller question, like, is there someone at the Internal Revenue Service that you're so particularly fond of that you want to make them the primary beneficiary of your estate? She's like, what do you mean? It's like, real simple math. You guys have 2 kids, right? Yep. It's like, let's say stuff goes through probate. When it's all said and done, 40% of your estate goes to the IRS. Leave 60% for the kids, right? It's like, yeah. I was like, so kid 1 got 30%, kid 2 got 30%, and the Internal Revenue Service got 40%. Didn't you just make them the primary beneficiary of your estate?
Yeah, no doubt.
He was like, well, I guess. It's like, okay, well, there's not a right or wrong answer, but is that what you want to have happen to the money?
Yeah.
Next week, set up.
Yeah. I mean, and the trust business is also segueing, into, it's also a big software program, right? So we've upgraded our software program the last couple of years so we can really handle a higher workload, and really provide a quality product with very few errors. I mean, of course, no errors is impossible, but we're trying to, make them minimal. So, we've got a swift team, a swift process. So we make it smooth, a good experience. And all those other factors do have to be, it's money. You're talking about money. So someone has to understand money. But I mean, it's a full circle. So
what's the, ideal scenario in your relationship with an agent wants to work with you and get some stuff set up? Do they need to, or start sending clients over? Do they need to sign any agreements with y'all? Is it binding and exclusive? What does that look like? And then once they're ready to start sending folks to you, how do they send those folks over? What can they expect to happen as they do that? Kind of give us a rundown of the process, top to bottom.
Yeah. And right now, I'm happily to report that we're really building a nice CRM, that's really going to be more automated and all that. And, I have a Calendly and all that stuff. But basically, for the most part, the agent just says, oh, I was so-and-so told me, about you. I'd like to introduce myself. So then I just set up a time to talk to the agent and discuss the service. And then they ask, what's the best way to get over the client? And I say, it's up to you. You can either email, maybe send us a group email or group text introducing me, and then some agents just aren't, I mean, if you can believe it or not, some aren't interested in the referral fee. So I'm not going to fight with them if they're not. Okay, that's fine, more for us. But some people don't even want it. But it's
those checks to Peter Wood, Kara.
So, but basically most people say, they bring it up. And then I say, yes, absolutely. So we're going to put that agent in the CRM, and they're going to always know, the status of what's going on. So it's really just kind of introducing me with the client. And then, I don't think it really works when an agent gives my phone number to call me, because God knows that client never ends up calling, So just like a group introduction, either via text or email.
What's a typical timeline? I know there's been times I'm working on a case and the client is adamant, hey, okay, I agree, need to set up a trust and update my will and do some things. And I don't want to do the thing that we're talking about doing until I just get that all done. Right. And in the past, I've made some referrals, and like you say, clients are clients. We'll make the introduction, but the client's not going to pick up the phone. It relies on you to pick up the phone. Hey, saw you in that email. Super great to meet you. Let's get the ball rolling here. That kind of conversation. But other folks that in the past, we used to refer to years ago, they would never pick up the phone. And they would just sit there and like, well, your client never reached out. Or I sent them an email, they never got back. And it's like, Doug, that was 30 days ago. Did you follow up? Like, do you understand you're in sales too? You know?
Yeah.
And it's like, man, this person is coming up on retirement. They need to start taking withdrawals in the next 30 days. And the product takes 30 days to start giving them lifetime income or something. This needed to be done yesterday, right? What is a typical timeline on a standard? Maybe it's nothing crazy. It's these folks need to update a will and maybe set up a living trust and start getting it funded and those things. So that
It's
we can
within a month. The only time it takes longer is when we go through the questionnaire, if I'm asking questions that they don't know the answer. I mean, there was one yesterday that I was going through the questionnaire. I said, well, who do you want your successor trustee to be? They don't have any kids, or they're like, we don't know. We need to think about that. Okay, well, I'll send you a follow-up email with a list of to-dos. That's one. Now, who would you want your beneficiaries to be? Oh my goodness. We don't know that either. I'm sitting here like, okay, well, these are obviously very important information that we need in order to start processing your trust. So if it's going to take a month to get me these answers, obviously that's going to delay. We can't do anything without that information, So sometimes the client just lags on getting us information that we need to finalize a trust. But if it's smooth and we have everything that we need, generally it's shipped to the client within 2 to 3 weeks. And then there's another meeting to go through the trust together. It's wonderful when the trust is perfect. There needs no corrections, or, oh, you know what, let's change that language, or, oh, we reconsidered and we want it's like, all right, well, we'll get everything corrected. That's another week or so. But then I walk through funding. So, it's within a month generally, unless, someone's dragging their feet.
I think that's actually a really good timeline. 'Cause when folks consider a trust is not a piece of paper, right? A trust is the reorganization of your entire life's work.
Yeah.
That is what a trust is when it's done properly. And to get that done in a month, like, hey, it took you 60 years to put all this together. In 1 month, we're going to get it reorganized.
Yeah. Yeah. And it comes to life with signatures and funding. Other than that, it is paper.
Yeah.
Yeah. No signatures. It's not worth much.
So what is funding, just for folks that are listening? I'm familiar with it. I'm sure Peter is, but I think there's a lot of folks that'll listen that are like, well, what do you mean funding? It's not like you're buying a life insurance policy, which no, it's not. You paid for the trust, but paying for the trust is not funding the trust. So could you maybe just take 2 minutes and break down funding?
Yes. And, funding a lot of times can be optional, but basically imperative is funding is to retitle the properties from their name into the trust we prepare it, we do it. We need a copy of the deed to the house because there's certain, language we need to put on the quitclaim deed. And we transfer title from their names, potentially as joint tenants or a single woman, into the John Doe Family Trust or whatever the name of the trust is. And then that's sent off to the county recorder. And then that home is funded. Some scenarios, if there's rental properties, we're actually funding the home into, in some cases, an LLC. And so now the house, and we can do that too. We can transfer the property into an LLC and then assign the LLC to the trust. So, and then other assets, there is a pour over will in conjunction with the trust that, like you were mentioning, kind of swoops up some of the accounts that you don't fund. There are limitations. Each state's different, but most states are about 30,000 that you don't want non-IRA money to exceed through the pour over will. Otherwise, you're going to have to go change title that account into the trust, or even easier is you can do what's called a TOD, transfer on death, and put the trust as the beneficiary of those accounts. And then, life insurance, and in a lot of scenarios, we put the beneficiary to be the trust, so it's different for, it might be a little different for each person, but again, we walk them through that to make sure everything is set up, to perfection. Because if not, it'll be complicated or trigger probate.
And that's all part of the package. It's not like, hey, we're gonna upcharge you for every quit claim deed we've got to do, or every title, or
Well, the only time there's additional cost is if there's additional properties.
okay.
So the quitclaim deeds are additional costs, not assets, because to fund the trust with assets, there's an abstract in the trust, or it's called certificate of trust, and that's like a 10-page summary. All they do is submit that to the financial institution and fill out a form. They have to do that themselves. So there's no additional cost, for assets. It's just for the quitclaim deed for the property.
Okay. That makes sense.
So that's the only additional cost.
So I have a question for you about why people come to you for getting a trust set up. So in Carson and I's business, when somebody comes to us proactively and says, I need life insurance or I need long-term care, it's because something happened. It's because either they got a bad diagnosis or something happened to someone they're close to, right? Mom and dad ended up in a skilled nursing facility, aunt, uncle, brother, cousin, neighbor, spouse. Something happened to somebody, and that prompted them because, the common joke's not the right word, but common saying is like, nobody wakes up in the middle of the night and goes, I need life insurance, even though I did that. I did.
Some people do, actually.
Why?
Yeah.
They might say, I need life insurance, but they're never like, I need life insurance.
Exciting.
There's a tip. My wife and I had 2 boys within 12 months and 9 days. And the first one, I was just over the moon, wasn't even thinking about it. The second one showed up and I literally sat up out of bed cold. It's like, oh my gosh, I'm responsible for 2 more people. Yeah. Okay. So with your business, what's the most common reason that somebody finally, they haven't been doing it, they didn't know about it, but they show up and they're ready to go? What's the reason behind that most of the time?
Boy, I mean, some of it is even just being educated nowadays just on social media, seeing a lot of ads on it. It's just, their awareness is there because God knows 20 years ago, that wasn't what was happening. Right. But yeah, maybe they just had a child, or maybe one of they heard their friend. A lot of people had a friend or loved one that had a heart attack and died out, out of the blue. And, something like that, a hardship that's occurred to someone they know. Some people are just motivated to get their act together. It's all of a sudden time to grow up, so I've seen, a lot of scenarios. And, like this morning I did one for a client, he was motivated to get, not for him, but for his father, because his father's starting to become ill. So, there's a lot of different reasons I've heard. Or just, they're out with a friend and the friend, the conversation, comes up. And a lot of people, get my name from a client that we've done. And they're like, oh my gosh, you know somebody. So it makes them comfortable that they're being referred to somebody they know is going to make the process nice, easy, and non-intimidating. Some people don't even know where to go. They want to go sit in some fancy office overlooking the ocean that they think they're going to be charged like thousands and thousands of dollars. Some people are intimidated by it. So when there's an easy solution, people are going to be more motivated, or, they're going to be motivated to get it done, knowing it's just not going to be this disastrous, expensive process.
Not an episode of Suits every time you need a will or a trust updated.
Yeah, exactly. Nice and simple. So when they find out there's an easy source or an easy solution, that probably helps motivate them too. So, that's why we do fair prices and, we grow through referrals. I mean, it just speaks for itself. So
I think that's where the agents really need to dive in on this concept, right? It's not only value without expectation, right? You're talking to clients anyway. It sounds like almost every single reason that you gave as to why somebody comes in and gets a trust set up boils down to one thing. It's they talk to somebody.
Yeah.
Whether it was they heard on social media, they talked to a neighbor, a friend, a family member, a trusted advisor, whoever, they talked to somebody, right? And then the second part of that process is there was some kind of connector for them.
Yeah.
Right? Somebody said, oh yeah, talk to my girl, talk to my guy. This is the person that we used, right? I use them. Don't use them. Find someone else. But that's that's where as advisors, we really can be true advisors. And I tell my clients all the time. I met with a client last night and we're looking over, she sold her home and we're going to do some stuff with her money to keep it safe so she can transfer it generationally. And as we were talking, it's like, hey, so you're going to keep, like Carson was talking about, you're going to keep X amount of this money back. Because once we put this money over here, it's going to be locked up for a while. You have access to it a little bit at certain times, but the liquidity goes out the window in exchange for that safety and guarantee and growth. So we need to make sure that we keep some money over here. Like now, the money that we keep over here, we need to put the bulk of that in a high yield savings, like your Bank of America account, nothing, Wells Fargo, whoever, Chase, that regular savings account that pays 0.1% a year, it's not the way to go. So you really need to look into a high yield savings account. Now, I don't do those, but if you want, I can help give you some options on these. Are a couple places that do that. The same thing with, do you have a will or trust? Okay, I don't do those, but I have people that I can connect you with. Do you have an attorney or an accountant? I don't do that, but I have people that can help you with that.
Yeah, I don't do my own car either, right? I don't fit my. Yeah, well, I mean, everyone's got their niche, right?
Exactly. And when you refer that business, you bring out the need and the opportunity and you bring it to light, and then you go, hey, this is a big enough thing that I think you should take care of. And I'm not trying to sell you something right now, and I can't even do that for you. Then it's like, oh, we need to do that.
Yeah. And I've seen a huge explosion in business, the last 5-10 years with the Hispanic market too. And that's a really loving, family-oriented community that they're not even aware, and they're now becoming aware. And boy, are they moving forward to get this trust done. So that's a hot, new, growing, part of our business, as well as younger families. Like again, 20 years ago, no, it was all older people. Now it's younger. And I blame social media for that, for sure.
So you mentioned social media a couple times. As we wrap up, I've got a few questions I have to make sure we get in. What's the most egregious lie you've heard about estate planning on social media? Because you said you've been paying attention. If there was one thing folks are hearing out there that they probably need to disregard or maybe even report as fraudulent, what would that thing be?
Well, I mean, I've heard just little things, that I'm like, no, that's not right. Like they're saying that the trust should be the beneficiary of retirement accounts. Maybe that might make sense if there's minor kids, but that is going to impose a big tax bomb. So I'm kind of like, yikes, not always. And then I've shared a few of the posts with one of my guys, Jim, in my office. And it's like these land trusts never own anything. And it's being marketed to like everyday type people, but it's really for the elite. So it's kind of being almost misled that this is for everybody. And it's kind of like, really for more advanced kind of 5%,
These mom and pa coming in that want a land trust and a deferred sales trust and a benevolent ownership trust. And it's like, no, Jerry, you need a living will and trust right now.
Yeah.
And then let's
Cayman Island Trust,
I feel like I'm very hopeful for you, and I hope that at some point this makes sense. But where you're at right now, you just need the basics.
Yeah. So they're trying to cater to like this is for everybody. And it's kind of just a little misleading that this is for everybody when there is a market for it, but it's a smaller market.
Right. Well, and what's the likelihood that market is spending a significant amount of time on TikTok?
Yeah, exactly.
So we have the same problem in our, folks taking something that really is catered towards the higher end of the market, the upper end of middle class, and then moving into high net worth. And they're putting it out there. And so you got, ma and pa that make $45,000 a year between the two of them that go and try to use this financial instrument and realize that it just screwed them because it was never for them.
Yeah.
They needed a savings account first.
Exactly. And it's like trying to oversell somebody and overspend when they didn't need all that stuff.
Yeah.
So overcomplicating too, that kind of thing. So it's just, it's very individual for each person. So, but it's kind of a little, to me, just I'm seeing a lot of it on social media, but
So beware, folks. So other than obviously the folks in our network can go to revagencysyndicate.com/free sources and find y'all on there, Integrity Estate Planning, right? And they can come right to you through there. How should folks get a hold of you if whether they want to send you a client or maybe they just want to talk to you for themselves and get a little better feel for you and see if they want to send clients? How would they get a hold of you?
just my phone number, old-fashioned phone number.
You want to put it on? You're more than welcome to put it on.
I do.
Whatever you say, we're gonna publish. So you're responsible.
Do I write it or do I say?
Say it.
Just go ahead and say it, and my team will make sure we get everything up in the descriptions and whatnot.
And we have a toll-free number too, but direct for me is 310-387-4111. And our toll-free is easy. It's 866-49-TRUST.
Listen, if you're looking for other ways, maybe I just looked it up while we were talking. And DinaItrust.com is available.
There you go.
I'm just saying, it's catchy, it's easy to remember. You can get it for like $1.99 right now.
Hey, duly noted.
You're messing this up. You should have just bought it and turned around and resold it.
Yeah, too late. Cat's out of the bag.
Cat's out of the bag. Was there, Dina, before we wrap up here, is there anything else you want to share with folks? Anything you want to leave with? Any other value nugget you feel like you have? Or
well, I mean, what sets us apart from other, a lot of the advisors and insurance agents are using these online platforms is that really what that is going to bring is really bare bones, basic estate planning. But working with us, we're going to walk through everything. First of all, if you go that route, you might not set it up correctly and you might not maximize the value that the trust can bring. So we're going to walk you through everything to make sure step by step, everything's being done properly. It's being set up properly. We maximize the value that the trust can bring. And also we are there for you down the road. If you have a question, we don't charge for questions. We only charge for paperwork. So you're always going to have someone in our company to call and ask questions. If your scenario changes, the law changes, so you just have a lifelong estate planning partner that you can always reach out to and just make it easy, even for your successor trustees, and people that inherit your assets or your estate.
It's crazy you mentioned that. I don't want to I want to be respectful of your time, but I have a client whose parents grew phenomenal wealth. They grew up an estate that was worth about $10 million, but they were cheap to a fault. And by the way, that's part of the reason they grew wealth is because they were phenomenal savers too.
I know the type. Yeah.
Right. But they went, and I know you can't say it, but I'm going to say it, and because I can, and they can come after me if they want to, but they had their trust done through LegalZoom, which LegalZoom, all it does, you pay a fee, they give you the template, and they might give you some information on where to go file this or that. And that's about it. Right. But that's how they had their living will and trust was through LegalZoom. Well, the things that they weren't told was how to properly fund it. They weren't told how to how to update things as they went along. And then most specifically with this, they didn't have anybody that taught them anything about entity concept. Like, hey, if you wash money back and forth from your life to the trust, then when it comes to lawsuits, when it comes to this, when it comes to that, they're treated as the same. Because if you treat it the same, why wouldn't the court?
Yeah.
Right. And no, they didn't have anybody explain that to them on a $10 million estate. Well, when they passed, both mother and father passed within about a month of each other. His mom passed, think of it like a broken heart. He passed away and she was just done at that point. She was done living life. And so it all happened very rapidly, but they still had some business dealings. And then none of the siblings got along. 100% of that estate got wrapped up in probate.
Yeah.
All in contest. 100% was in contest. The family lost about 50% of the estate to business dealings that weren't properly protected. And then they fought over the other half of that estate, paid a ton in taxes, paid a ton of attorney fees fighting over the damn estate. And when all was said and done, there wasn't a single sibling that got more than I think $600,000-$700,000 was about the total value in assets and cash assets that each one got. And they didn't have 10 kids, right?
Yeah.
They had 4. So
Yeah.
it just depleted. I mean, we're talking 75% depletion of the entire estate
Yeah.
because they thought they were protected through a document that didn't protect them.
Yeah.
So that's kind of interesting you bring that up. So
It's just like my insurance online. You don't know what you don't know. The Name Your Price tool is a crazy liability for clients because they don't know. Those clients have, it's like, what limits do you have? I got 100, 300. Why? Because that's what my parents had.
Yeah, no doubt. That's why I was saying it's like everyone's got their niche. Trust me, I'm not going to go open my hood and fix my car. I promise you that. So anyways.
well, cool. We will let you go. Thank you so much for being here. We'll get this up and published. And as we do, we'll make sure you have links and everything like that. But I'm really, really excited to, we've already kind of introduced you to some of our folks, but to introduce you to more of our folks and really let everybody see more of the real value to what y'all bring to the table and what's unique about integrity estate planning versus quite a few other places. So
yeah, we've been around 25 years. We have an amazing team of people, and actually they're all really nice people too. So anyways, they're a pleasure to work with, and I love my group. So we love our clients and we love you guys. So spread the word. We'll pay you a penny or two. Okay. $500.
We appreciate so dang much, Dina. We'll chat soon.
Okay.
And I hope you have a great rest of your afternoon.